Hey everyone, welcome to CoveredCall ETF Investing. I'm Jordan, and this is your central hub for deep CoveredCall ETF data. And in today's video, we're going to be looking at a snippet from a Google Sheet I created called the CoveredCall ETF ALLSTAR Tracker, a place where you can have all of your Canadian and US listed CoveredCall ETFs filtered in one location to explore performances, 3-month average volume, yields, dividend streaks, distribution changes, taxes. There's a lot there, and that can all be picked up on my Patreon page, which will be in the description below or in the pinned comment section, the very first comment that you'll see. So let's check out USA distribution changes. Let's go over to some distribution changes this month. What tends to be a little bit tough to talk about is distribution changes on the American side of things. Now, if you didn't catch, with the Canadian stuff, usually with each tracker, I do May here, or I would do the most current month, right, the month that this video is coming out in, and then the previous month. But on the American side of things, the way the distributions work, it's basically I have to do a month back to track it more evenly, track it more properly. So I can't put May, or else there's going to be a ton of gaps. So I've decided on the American side of things, it'll always lag behind a month. So the Canadian side of things, the most current month plus the previous month, whereas the American side a month is the previous month heading up the most recent distribution, and then the previous month to that. So on the Canadian side of things, it's May and April. Here it's April and March. So let's go through some of the changes in distributions this month. They bounce all over the place. Unfortunately, that's one of the biggest differences between the Canadian market and the American market when it comes to CoveredCall ETFs, is that the American stuff bounces around a lot. So it makes it a little bit more tricky to really talk about these. These look amazing, and honestly, they would be so much more amazing if the funds were stable, and then we see these massive jumps in distributions or changes. So the only ones that I feel like it makes it just, again, a lot harder to speak on all this stuff. But nonetheless, I mean, I'll do my best to give more of a more proper explanation. And anyways, let's just get into it. So DYLG, basically going from 6 cents to 10 cents. Just more volatility across the whole market in the month of April, which leads to these massive jumps in distributions. I'm not surprised. A lot of the yield max stuff like Coiny, Bitcoin has crazy volatility right now. Coiny, I want to say, has a yield of something like 150% at the moment. So again, we'll just kind of see how that story plays out, but crazy. Then we got Alti, which up 33% with its distribution increase. But wow, it's basically the highest volatile stocks, I think, across the American market. Then there's some kind of more plain Jane ones like Pappy. It's a brand new one, Parametric Equity Premium Income ETF. Basically tracks, I believe, the S&P 500. Then we do have some sector funds, which is actually kind of rare on the American side of things, with Global X, with FYLG, a smaller yielder, up 20%. The thing to watch out for with the Global X stuff is some months you'll get 2 distributions, then it'll skip a month, then it'll do 1 distribution, then skip a month, 2 distributions. It's kind of all over the place, but in the distribution tracker here, you can go to all the Global X stuff, and if we go over, you'll see what I mean, right? There's gaps, random gaps, and sometimes you'll see just bigger distributions compared to other months. So see, like I said, it's like, why are we getting, right? We'll get like a gap here, 1 month gap, and then another gap, and then it seems like it may be more regularly paying now within the last year or so. But again, just something to look out for with the Global X funds. Anyway, heading down the list, let's go into the funds that have declined this month. I'm seeing a bunch of Curve. Now, these funds are, if you go into the fund manager website, you're going to see that the AUMs are not listed, mainly because their AUMs are tiny. They're all under $1 million. I think, other than maybe the Tesla one is all under $1 million. So just watch out for that when you're looking at Curve stuff, but they're kind of more conservative single stock cover call ETFs, right? So they're not crazy like Yield Max when it comes to their yields. So if you're looking for just a mild version, a mild sauce of Yield Max, then Curve might be the way to go if you're looking for single stock ETFs. But anyway, the yields are down, which is maybe come as a bit of a surprise since we have seen more volatility, and usually that volatility affects the single stock cover call ETFs more than the diversified stuff, right? The more concentrated something is, the more outperformance you can get with it, and also the more of an anchor it can be on the portfolio when the market is suffering. I want to say FEPI is another one that kind of surprised me with a smaller distribution. It actually has been maintaining a fairly even distribution. It is just pure technology. You might want to say, well, it's a NASDAQ 100 cover call ETF basically. It is not. It is like pure technology, full pedal to the metal on just technology. Whereas don't forget, the NASDAQ 100 has a weighting of technology. I believe it's something like 50% technology. You know, there's another certain percent that's communication. There's another percentage that's consumer staples that you would see in any other index like the S&P 500 or the Russell 2000. But either way, even though it's down 8% on the month, I would still say kind of fairly still in that stable range. But I want to say that for the most part, since its launch in November, it's been like $1.18, $1.20, $1.21. So this is the first month we see it take probably its most significant hit. And then everything else, like YBTC, to just taking a beating. But I mean, its lifetime distribution change since it came out in January is 50%. So you got to expect that with Bitcoin, guys. It's going to be all over the map. Same with the single stock ETFs. They're kind of all over the place. You see a bunch at the bottom here. You see a bunch at the top here. But and with the more kind of diversified stuff sort of in the middle, which is what I expect. Hopefully you liked that small snippet of the CoveredCall ETF ALLSTAR tracker. There is a fully 1.5 hour unedited version over on my Patreon, which will be in the description below, so you can check it out there. Some other features in the Patreon are you can actually have access to the tracker yourself. There's going to be also live meetups every single month that you can be a part of. Get to ask me all of your questions in a small group setting, especially while the Patreon community is fairly small. That's something I'll have the ability to do. So come on over there, check out the full version of this video. Or if not, then just wait for just smaller releases throughout each week and continue to learn about CoveredCall ETFs in more bite-sized chunks. So with that being said, hit all the buttons to the like and subscribe variety, and I'll see you all in the next video.